Imagine checking your bank account tomorrow and discovering that someone emptied it overnight. No warning, no explanation, no way to reverse the transaction. Today, you'd call your bank, maybe the police, maybe your lawyer. But for most of human history, none of those existed. No banks, no insurance, no fraud department, and yet people still borrowed money. They invested, they signed business agreements, they trusted strangers with everything they owned. So what happened when someone cheated? Did ancient societies simply accept financial fraud, or did they invent punishments so severe that most scammers never dared to try? Because the answer reveals something surprising, not just about justice, not just about money, but about human nature itself. Thousands of years ago, your reputation could be worth far more than gold. Financial scams feel like a modern problem. Online fraud, fake investments, identity theft, Ponzi schemes. But deception is almost as old as civilization itself. The moment humans began trading grain, silver, livestock, and land, someone discovered that lying could be profitable. Ancient societies understood something we often forget. Without trust, trade dies. They had no banks, no insurance companies, no digital records, so they built something stronger, a system where trust wasn't protected by technology, it was protected by the community itself. Today, we're traveling thousands of years into the past to discover how ancient civilizations punished financial fraud and why their ideas still shape our world today. Before banks existed, wealth looked very different. It wasn't numbers on a screen. It wasn't plastic cards. For many people, wealth meant grain stored inside temples, livestock, land, silver, or simply a promise. In ancient Mesopotamia, farmers borrowed seeds before planting season. Merchants borrowed silver to finance dangerous journeys. Families made agreements that might not be completed. For months, sometimes even years, almost every transaction depended on one invisible thing: trust. If trust disappeared, the entire system collapsed. Ancient societies understood something that modern psychology now confirms. People cooperate only when they believe. Cheating has consequences. Without trust, markets don't function, civilizations don't grow, prosperity becomes impossible. Around 1750 years before the birth of Christ, King Hammurabi introduced one of history's most famous legal systems. His laws weren't hidden. They weren't locked away inside government buildings. They were carved into enormous stone monuments, standing where everyone could see them. Many of those laws focused on business, loans, property, contracts, dishonest merchants, false accusations. If someone falsely claimed another person's property, the punishment could be severe. Merchants who violated agreements risked losing their assets. Even judges could be punished if they deliberately changed a legal decision after making it. The message was unmistakable. No one stood above the law. Perhaps the most remarkable part was transparency. Everyone knew the rules before making a deal. Predictable justice created predictable trust, and predictable trust allowed economies to grow. Today, when we think about punishment, we usually imagine prison or financial penalties. Ancient societies thought differently. In many communities, your reputation was your greatest asset. Imagine living in a town where everyone knew your face, everyone knew your family, everyone knew your history. If you cheated someone, there was nowhere to hide. Customers stopped buying from you. Business partners walked away. Neighbors refused to trade with you. Marriage opportunities began to disappear. And sometimes the damage didn't end with you. Your children could inherit the same reputation. In small communities, trust worked like another form of currency. You couldn't see it, you couldn't hold it, but everyone knew its value. Lose it once, and earning it back could take years. Sometimes it never came back at all. For many people, public shame hurt far more than losing money, because wealth could be rebuilt, but trust was much harder to recover. As Rome expanded, its economy became larger, more connected, far more complicated. Trade stretched across continents. Merchants crossed seas. Contracts became increasingly sophisticated. As commerce grew, so did the opportunity to cheat. Roman law developed stronger protections against fraud, against deception, against dishonest business practices. But legal punishment was only part of the story. Romans valued something they called dignitas, not wealth, not power, honor, reputation, public respect. A merchant known for dishonesty might lose customers, business partners, political influence, powerful friendships, everything that made success possible. Money could be earned again. Honor was much harder to rebuild. And once again, the lesson remained the same. Protect your reputation or risk losing everything. Thousands of years later, our financial system looks completely different. Banks verify identities. Governments regulate markets. Every payment leaves a digital record. Technology has transformed almost everything, but one thing has never changed: trust. People invest because they trust. Businesses grow because customers trust them. Entire economies depend on millions of strangers believing that promises will be kept. When massive financial scandals shake the modern world, the money lost is only part of the damage. Confidence begins to disappear. Markets become uncertain. Entire industries can suffer. Thousands of years have passed, yet human psychology remains remarkably familiar. Ancient civilizations understood something that we continue to rediscover. Laws matter, technology matters, but without trust, no economy can survive. Ancient people never had cybersecurity. They never had fraud hotlines. They never had online banking. Instead, they relied on something surprisingly powerful: clear laws, community accountability, and the belief that reputation was often worth more than wealth itself. Perhaps that's why history's oldest financial lesson still feels surprisingly modern. Money can always be earned again, but trust is far more difficult to replace. If you enjoy exploring the hidden psychology, forgotten history, and ancient ideas that still shape modern life, consider subscribing. Every week, we uncover another story that explains why humans think, feel, and behave the way they do. And before you go, here's a question. Do you think public reputation is still a stronger punishment than prison for financial fraud? Or has the modern world changed that forever? Leave your thoughts in the comments below, because sometimes the oldest answers tell us the most about ourselves.